Even though Bitcoin is going down, we have still some bullish news here, but the market did not react it as expected. And now everybody is wondering, will we go lower or are we at the local bottom and will reverse back to the upside? That is something that we need to talk about today. Make sure that you are subscribed to the channel, like this video, and also activate the bell so that you will never miss out on these important updates. And now let's jump directly into it. So what happened yesterday in the last 12 hours? Here in my morning, really early morning, came out some news out of the US that a bank collapsed there. And the bank that we're talking about is called the First Republic Bank in Pennsylvania. This bank is now bankrupt. And here is the official statement. So this is 12 hours, that was posted 12 hours ago. So here only the really important part is basically where we get the confirmation here. Fulton Bank's acquisition, where was that? Here. Failure of Republic Bank will cost $667 million, but they have $4 billion in total deposits, so they are covered. And there is an insurance fund to refund or basically assure the depositors' money of that bank. Regardless, this bank failed and is one of the first banks this year that actually collapsed in the US. Usually when we get a banking collapse, the whole crypto market is receiving that really well and we see a push to the upside, but not yesterday. And I'm gonna show you here in a moment why we actually went down and not up when this news came out, because this is not normal for Bitcoin to react like this. I want to show you the ETF inflows from yesterday. So here we have now again 3 days of a streak of negative flows. 2 days ago was the biggest one where we had 3.4 thousand, so 3,400 Bitcoin of net outflow. And yesterday we had 1,300 Bitcoin of net outflow. And most of it, of course, from who else should it come, came from Grayscale here once again. And funny enough, BlackRock for the last 3 days did not buy at all. That's also really strange for BlackRock. Maybe they know something that we don't know and they let it play out, whatever it is, before they start buying again. I don't know. But it's definitely strange that they did not buy here while they were buying so much before that. And the other thing is they have still way too much money to allocate into the ETFs, which makes it even stranger that they just completely shut down to buy, over the last 3 days here. Now, when we go to the daily chart on Bitcoin, remember that I pointed out that we go potentially back down here into that support area, touch it, and only from there going to get a bounce back to the upside. If that zone is not holding, guys, that is where you need to sell everything. I'm gonna sell everything, guys, because if this is not holding, we're gonna go down here to $52,000. So the line in the sand for me is around 59. If we go down to 59 and close the daily candle under 59, that's where I'm selling. Again, I'm not convinced that we actually go that low, but that we dip here into that support area, yes, we definitely can. And we also did touch it this morning already slightly and got a reaction back to the upside. Something else that we need to overcome here on the daily chart is this downward sloping trend line. Only if that is broken, we can expect a resuming uptrend. When we go to the monthly returns, here also something really interesting that I wanted to show you guys is that April for this year is the first negative month for Bitcoin. When we go back and have a look when April was a negative month, it was usually followed by another red month. So does that mean we should get concerned about Bitcoin for May? Remember, sell in May and go away because of the summer lull. I'm not convinced, just yet that this is going to play out. We have 3 days left. In these 3 days can still happen a lot. So do I think that we get a push of 12% to get here to plus minus zero? No, I don't think so. But can we go back up that it's under 10%? Yes, definitely. And I'm going to show you here in a second why that is something that I'm betting on. One reason for that is the CME chart. The CME yesterday closed at $64,530. So now we are at $62,800 approximately. So this is a big gap, guys. So if we are not coming back up tomorrow to close that gap, so this is a 2.6% gap, and this is massive on the CME chart. So something like this gets filled really, really quickly usually. I cannot imagine that we just do something like this and make it bigger and bigger before Monday, and maybe open on Monday then here at around 60,000, and Bitcoin just does this and keeps going down, while we have here like a $4,000 gap above us. This is in a bull market, this is something usually what we don't see. These CME gaps get filled rather fast with continuation to the upside, then filling it, fake out, back down, continue to the downside. So this is something that I'm looking forward to, and also looking for to trade. Hence why I want to add more to my Bitcoin long position over the weekend. I'm basically sitting on the trigger, just waiting for a little bit more downside before I actually go and buy. So here on this 4-hourly chart, and we have still our triangle shape. Here on the triangle shape, we are getting closer and closer to the upward sloping support line. Is sitting at around $62,000 right now. If we would lose that, that will be your first warning sign that we might go all the way down to 60K. A line in the sand here on the 4-hourly chart is around $61,600. If we lose that level, so if we lose that, then we will most likely go to 60,000. And from there, I definitely expect a big reaction back to the upside. If we don't see a major reaction and we would do something like this, around 60K, so and the bounce is getting smaller and smaller, then we should definitely get prepared for a move to the downside. On this 4-hourly chart, you see one of the reasons why we are going down and why the banking collapse in the US had no influence on the price action, because here happened something really crazy. I want to show it to you guys. Remember, I said to you 12 hours ago came the press release out. Look what happened here 12 hours ago. In these two candles here, we were about to go up and got immediately slammed down, and then the news spread and the Bitcoin price started tanking. So this, like I said, this is not normal. But you have to understand, why did the Bitcoin price tank? Because there's a reason for that. The reason is this support area here. If we would have reclaimed and kept the price afloat above $64,000, most likely we would have continued to go to the upside, especially with all the indicators being highly oversold right now. So we would have gotten a really nice push to the upside, but market makers decided low volume weekend, so let's push it a little bit lower to flush out a little bit more of the weak hands, and then next week potentially send it back to the upside. And also a reminder that all these imbalances above us still remain on the chart, and we have also a new one, a small one, so that could fill at any given moment. Here from 63,260 to like 63,560, that's the $300 imbalance. It's not really huge. So that I expect to get filled today at some point. The question is only, will it be next hour, next 3 hours? I don't really care, but I'm pretty sure that this imbalance here will get filled really quickly. If we further reject from this former support area here, then the next underlying support area is unfortunately here at around $60,000 and goes all the way down to $57,750. So we don't need to go all the way down there to get a reaction from Bitcoin, but because you see here, every other time when we got under 61,700 or here under 63,800, so here we got a big reaction back to the upside. Here then when we got all the way down to $60,000 approximately, big reaction, $2,000 move back to the upside. If we touch here again, and this time actually reach the underlying support and not bounce somewhere from up here, I expect at least another $2,000 move back to the upside, and that is something that we want to trade. So we're actually going to trade this here because you don't want to knife catch the drop when it's happening and market buy. What I'm going to do is I start stacking orders. So I take like 10% of that position and stack it at $61,000. I take another 10%, 60,600, 60,000, 59,500, 59, 58,500, and so on until I have basically used up all the capital that I want to allocate to this position. And then when the drop is actually happening, and let's say we bounce from 59,600, sorry, the wick goes all the way down here, and then we come back up and continue upwards. So what I can do now is I have here 20% left for this position that I did not take or was not executed, so to speak. And what I do then is that I go and will add the 20% once we are breaking above, back above $62,500. So now you ask yourself, why would I do it here and not above that resistance? So really simple, because from down here to up there, it's already a $2,000 move. And I would not be so sure to add the remaining 20% at $64,000, because what if we stop after filling here at $66,000? So I want to take as much as profit with me as I can. And I made already a bunch of profit from down here to up there, so that it will not really affect my entry price, so, but it will make my position bigger, but it will not have a big effect on my entry price if I got filled all the way down here to like $59,600. So, and I want to add the rest as early as possible at a good level before we potentially go a little bit higher and then maybe turn around again and only then move in direction of $70,000. So if you want to trade this trade with me together, guys, then go to BYBIT. The link is in the description below, or use Margex. And if you cannot use BYBIT, use BITGET or Phemex. They are equally good in my opinion, especially if you're in the UK or in the US. And if you just want to copy trade me, go to FAIRDESK. You still get $120,000 in deposit bonuses. The links are in the pinned comment below and in the description of this video, guys. Also, I'm setting up a newsletter. If you want to be always up to date and get informed what's going on in the market, what are the latest news, what is a potential good long-term play that I'm looking at and researching right now with my team, then use the Google form down below here in the description. You see it not now here on the screen, but I will put a Google form in the pinned comment and in the description where you can give me all the info and to subscribe to the newsletter that's coming out. So definitely check this out, guys. When we go here now into the lower time frames to get a better picture what's actually happening here, on the 30 minutes chart, I have to say that we continue the downtrend that we had initiated from all the way up here with lower highs and also lower lows on the way down. So then here we had equal lows and then reversed. And this whole thing here is basically a deviation, so to speak, irregularity on the chart, because we continued to make here in this structure lower lows and lower highs. And now potentially, we are starting to make equal lows. So here, that is now it's actually another lower low. And here maybe the first higher low. So, but again, right now I'm not so convinced of that, So to confirm that, we need to see a break of $63,500 to break this lower high. And once we are above that, and from here some sort of support, I would sleep a little bit better. And to completely break the structure that we are seeing here, we need at least a retest of this lower high, or actually a local higher high than that, so only then I would consider the structure to be broken. The first sign for you will be when we are breaking above this downward sloping trend line. So if you see a break here above $63,400 ish, that will be your first sign that we potentially go back now to the upside. Here on the 1 hourly chart, the indicator's looking a little bit better. So would I say that here's a bullish divergence right now? Yeah, you can make the argument for a bullish divergence. So here, right over here, could make the argument that we are seeing here a bullish divergence. So, but again, we need to hold the upward sloping trend here on the RSI, and we need some follow through, so we need to break $65,000, so to speak, to say that the bullish divergence has played out and was actually confirmed, so only if we see that kind of move, we can speak about that the bullish divergence played out here. And something else that I actually just saw right now is that we also have here a broadening falling wedge, broadening ascending triangle. So that's what it's called. So this usually, if it breaks to the upside, so we are now of course closer to breaking it to the downside, the technical target here would be $66,500. If we are breaking it to the downside, the target would be around $60,330. So what I don't like here right now on the 1 hourly chart is the way how the stochastic RSI looks, unless we are getting here a break of $63,000 and stay above that for the next hour so that we really get here a solid uptick. But unless we are getting that, so I'm not really trusting right now what I'm seeing here, because it's just too easy, to see here continuation to the downside. Actually, let me get another indicator really quick here. So the EMA ribbon. So also the EMA ribbon is since Wednesday in a downtrend here. If you trade with the EMA ribbons, that would have been your sign to short, at $66,300. But again, I don't like shorting in a bull market because the downside is limited, but the upside has in a bull market no real limit. So that's why it makes not a lot of sense to me to short in a bull market, because the trend and the direction, the directional move can at any given moment change because of one news event, and we are going back to the upside and you get wrecked on your short. So I rather don't short in a bull market, and in a bull market play only one side, and that is to the upside. Now, when we get to liquidation levels, here you can clearly see we have a lot of over leveraged long positions here. The question is, when will they be taken out? Don't be mistaken here, so at some point we're going to see that move here to the upside. When we're looking here at the moving averages, that starts to look not really good, so we need a reclaim at $64,600 above the 50 moving average to have a chance to turn us around here back into an uptrend. Until this is not happening, we have to follow the trend, and that is right now to the downside. So, but here on the liquidation levels, we are running now into some long liquidation levels that should provide enough liquidity to push the price back to the upside. So, and the potential last level that we need to take out and touch is $62,300. That is the last over leveraged long stronghold here before we tap into low leverage positions. And once we're tapping into these ones, I definitely see us reverse here back to the upside. And this is also reflected here on the heat map. So for once, the hot areas from yesterday, they did not really move, so and here the underlying long liquidation levels that are basically the only ones that they can still take out. This also goes only down to $61,300, so, and then there is basically nothing, so why would you push it lower? It makes no sense, so if you go here to the 3-month chart, do you want to push it really all the way down to $50,000? To take out the huge liquidity that is sitting here and have like a $12,000 move to the downside? Or do you push it $5,000 to the upside, trigger a short squeeze, and get basically skyrocketed to $76,000 here approximately. So this makes no sense for me, you know. So to have such a big move here to the downside, to potentially touch this liquidity zone down here, you know, even though there is a lot of liquidity, you know, I'm gonna admit that. So there is like $4 or $5 billion down here. But why would you do that? Why would you drive it that low? You know, so if you can grab way more liquidity above us. So, but yeah, sometimes we don't get what we think we get, you know. So but I'm not seeing this right now, you know. So let's take it level by level. As long as we're holding 60K, we don't have to worry about what's down here. So when we're looking now on the 24-hour level, so you see here also some hot areas. That's why I'm saying we could actually go down and touch these, you know, before we see a move back to the upside. But here again, like 61,800 is potentially the lowest that we get, and from there we reverse back then to the upside. Here on this daily chart, I also only wanted to remind you that here is a really big imbalance still sitting at around $70,000. Here in this trading range that we are moving in right now has not really changed a lot because we are still above the $60,600 level, which is the bottom of that range, you know. So the only thing what happened yesterday is that we actually lost here this crucial support level that I have shown you a couple of days ago, where I told you that is basically the level from where we went up here into new all-time high, you know, that kind of gave us support. So we basically broke it here, but came straight back up, you know. So then again, support. Here we broke it, you know, we came back and now we failed again, you know. So, but here I believe that this range is actually holding, and in the worst case, that is our range that we will be trapped in for the next couple of months. So, but is that so horrible to be trapped here over the summer? I don't think so, because the top of the range is still $73,000, and at some point in May, I believe that we are actually going to touch the upper range here once again, as long as we are not losing the $60,000 level and turn $60,000 into resistance. Guys, that's it for today's update. I hope you enjoyed it. Please make sure to smash up the like button, hit the subscribe button, subscribe to the newsletter, and I'm gonna see you tomorrow.